Welcome. This is the chapter 2 video. It's the first one of two. Most of the chapters are going to be a little bit more detailed, but chapters 1 and chapters 2 are not quite as detailed, a lot more terminology. So I think I'll be able to fit fit chapter 2 into just two videos. So the first one we're going to be doing more work with terminology, get a sense of what this first section is. And then the second video will be a little bit more calculation heavy. So let's go ahead and get into today's lecture. I'm going to try and keep these hopefully to about 15 minutes. So the idea is that even if I'm not going to talk fast, but even if I'm going and you have questions, etc., hopefully you'll be able to just rewind and look at the video. So not so much on these terminology ones, but when I'm doing a calculation, you can kind of look at it again and again. So today we're going to be going over these learning objectives. And as I'm getting this set up, I'm kind of learning as I go about how to more efficiently set things up. So looking at this, I should have set up to where the learning objectives were grouped together rather than them being spread out, which they are in chapter 2. In chapter 3, I have set them up to where they're better grouped up. So what I have here is these are the learning objectives we're going to go over in this video. Learning objectives 2.1, 2, 3, 4, and 7. We won't go over all of them because some of the learning objectives have to do with Excel spreadsheets or with journal entries, and we're not necessarily covering everyone, but all the learning objectives we cover in the videos will be in the quizzes and will be in the exams. So here I have put underneath the question the homework question that is associated with this learning objective. So you can see we have questions not in the right, I don't want to say the right order, but not in kind of sequential order, but we have 6, 7, 8, 9, 10, 11, 12, and then there's a little jump, 15 and 16. So just be aware, questions 1 through 5 deal with chapter 1. It wasn't really worth having its own homework section. So questions 1 through 5 deal with chapter 1, which we covered in the first video, and is really just very general. And then the other questions on this chapter, of which there are 20, have to deal with the other learning objective 2.5, which is constructing an income statement based upon this information we're going to go over. So you can, as soon as you watch this video, as you go through this video, you can go back and go to the homework and complete all these questions, and then save the ones 13, 14, and then 17, 18, 19, 20 for tomorrow's or for the next video. So let's go ahead and get into it. The first learning objective is how do you distinguish between a service, merchandising, and a manufacturing company? That's the kind of categories that we look at in general. So we mentioned a little bit about this in the first video, in that merchandising has to do with what you studied in financial accounting, the idea that a retail or a wholesaler, someone who buys something, does no value add, just buys it, puts it on the shelf, and sells it. A service organization obviously is not selling any inventory item. It's like a doctor or a lawyer or an accountant who's selling their services, and they don't really maintain inventory. It's not that they don't have inventory. For example, an accountant would have, pens and paper, or a lawyer would have, different things they have, but it's not the primary thing that they're selling. It's not their main point of business. Manufacturing is a little different from merchandising in that it does have inventory, except that it has different stages of inventory. It buys raw materials, it converts them in what we call work in process, and then you have finished goods. So looking at this very simple grouping of, if you were looking at these details for these three companies, you could quickly see what type of company they are. And that's kind of the purpose. There's some more information in the text, but this is one of the things we're going to look at. So you can see here, Anderson, well, it doesn't have any inventory. So we would guess that this was, so pardon me while I get better at this writing on the tablet. Ugh. The Dean Company, well, it just has regular inventory. So we would probably say that these are merchandisers. And you can see here, this first one, they have raw materials, work in process, and finished goods. The three types of inventory, or the three basic types of inventory for a manufacturer. So we would say this is a manufacturing firm. So this is the primary way that we're going to look at the differentiation between these three different types. And in this book, in this text, in this course, we're going to focus on a manufacturing environment. Therefore, we're going to look at raw materials, work in process, and finished goods. And just FYI, get in the habit of saying work in process rather than work in progress. Okay, next one. This is almost strictly a definitional, and it's something that's been added fairly recently. We didn't used to talk about value chain, but it's come up as a definition. And because we're talking about the manufacturing environment, there is more of a value chain in a manufacturing environment than, say, in a merchandiser. Well, a merchandiser still has marketing and other things like that, but that may not have as much R&D or design. Purchasing, well, they'd have only one level of purchasing, whereas manufacturer has to worry about all sorts of raw material purchasing. Therefore, just be aware. Now, some of these items now, are going to be considered within the factory environment. And as we get a little bit further, you will see, well, obviously production is a manufacturing item, right? But marketing, does that have anything to do with making the product? So we would the part of the reason of understanding the value chain, at least for the purposes of this text, is does it have something to do with manufacturing or does it not? And just being able to identify. And for those of you who are accounting students, just realize that that accounting does not encompass the whole value chain. We may track things, we may keep the numbers for a lot of departments, but there's a lot of value added in the other departments. So just keep these in mind as we go forward. Learning Objective 3. This is where we're going to get into actual things that we're going to use in this textbook. So some of these terms we won't say a lot, but it's kind of, the text will use it, and therefore you just be aware of what it is. A cost object. So GAAP in the financial accounting textbook, a lot of things are very specific. And as I mentioned in the first video, managerial accounting is a little bit more, I don't want to say generic, but general. So here's like the first example of that, a cost object. Cost object could be anything. It could be a whole process. It could be a machine. It could be this material. But it's anything that we want to know what's the cost of it. How much does it go, what's the contribution, and how much is it costing the company. For example, I used to have a boss who, for some reason, whenever we had employee reviews, would also try and tell the employee how much the company is spending on their medical benefits and all that stuff. Because to him, that was the cost object, not his salary and wages. But of course, from the employee's point of view, they're thinking that those are just normal things that the company needs to incur. So just realize that other things can go into cost. It could be a more general, more specific item. Now, we are going to be very concerned with direct versus indirect cost, because in a manufacturing environment, this is going to allow us to understand the cost of goods sold. And if you remember, this first third of the book is kind of focused on cost of goods sold in a manufacturing environment. So our first level is it direct or indirect? And what that means is, here it says can be traced to a cost object, but what we're really interested in, or primarily interested in, is can it be traced to the product being manufactured. For example, if you are a bicycle manufacturer, well, all of the wheels you're buying, you can directly trace. I purchased this wheel, and I can trace which wheel goes on which bike, and therefore I would be able to directly measure that cost. I'd be able to assign, say, this cost, this wheel went on this bike, and be able to identify the raw material versus the finished product and what went into it. An indirect cost is something that you still use in the manufacturing the product, but either A, it's too hard to directly identify, or B, it's too small or not worth it. For example, let's say in the bike manufacturing example, if we buy buckets of grease because we need to grease the ball bearings. Well, I'm not going to sit there and have the employees measure out exactly how much grease they put on each ball bearing. I'm going to figure out some general amount. Oh, they use about 2 ounces per bike or something like that, and apply it in an indirect way. Another example would be on a house. Now, on a house, you might directly measure how much wood. Okay, I used X amount of 2x4s. But are you going to really say, well, let's make sure we keep count of the exact number of nails? Nope, you're probably going to say, I've got a bucket of nails and I used a half a bucket of nails. So it's either an indirect cost is something that still goes into the manufacture of the product, but either too hard or not worth tracing individually. So we want to keep a close eye on direct versus indirect. And as we do these definitions, we want to make sure that we understand these definitions can kind of be mix and match. Let's look at the next one. Product and period costs. And so this is the mix and match. So we could have a product cost, we were just talking about a direct or indirect, and we could have a period cost that's direct or indirect. Okay, so what is a product cost and what is a period cost? So a product cost is anything that we can trace directly to the product being manufactured. And a lot of times you will, some things are very obvious, like when I talk about the wheel on the bike. Well, that is something that's a product cost that goes directly to the bike. Now, when you get in a little bit grayer situations, you're going to look for any sort of terminology that talks about the factory or the manufacturing process. If something within the description talks about it's within the factory or within the manufacturing process, that's a product cost. If it's something not related to the product, still something necessary. Let's say it's the sales and marketing team, it's the CEO, it's the insurance, or something not related to the factory environment, then it's what we call a period cost. And that means period costs, if you think about in accounting, at the end of the period, we create the financial statements. So it's not something that we trace directly to a cost of goods sold. It's something that gets added into the financial statements at the end of the period. Therefore, we call it a period cost. So let's classify these and kind of talk about whether or not, if it's a product cost, whether it's manufacturing overhead, direct materials, or direct labor. So we haven't talked about these three yet. But these are going to be, when we talk about a product cost, these are going to be the three primary costs that we're looking at. So direct materials are anything, like we're talking about the wheel on the bike or the seat on the bike, or anything that can be individually counted and directly related to the final product. Direct labor, well, that's anything that's still the person who's assembling the bike, or anything that's directly related to, I can say this person's labor went into being, I can directly measure it and trace it to this particular product. Now there's going to be a whole bunch of indirect stuff, both material and labor. So the nails, that's an indirect material. Let's say there is a supervisor. A supervisor is someone who is not necessarily working on any individual product, but he's supervising all the people that are in the manufacturing environment. So even though that's a labor, we would say it's not direct labor. We can't direct the supervisor's labor directly to any particular piece of finished good. So we want to understand that manufacturing overhead, direct materials, and direct labor. And typically we say direct materials and direct labor, we call these prime costs. And direct labor and manufacturing overhead, you'll hear sometimes in the book, we call this conversion cost. Meaning materials, what do we need to convert the materials into finished goods? Well, we need labor and we need all the other indirect stuff. So a retail store lease. Well, we would say that is probably a period cost, right? It's not directly involved in the manufacturing environment. When we look at, the property insurance on the factory. So I had mentioned before, insurance may be one of those dubious ones, but if we said on the factory, in other words, it's a necessary cost to running the factory, we would say, okay, well, that is probably a product. Let's see, get it highlighted again. That's probably a product cost But can we trace insurance directly to any product? We can't. So we would say this is probably manufacturing overhead. Cost of raw material from the supplier, well, that's a product cost. And we would say, well, that's direct materials. These are materials that are going directly on each product. Now, they could, if you said, the reason why I'm saying it's direct material says it's the primary raw material. But if it's some incidental raw material, like it's nails or something like that, we would say then maybe it's manufacturing overhead. Depreciation on sales staff equipment. Well, the primary thing here, or the main thing we're looking here, is sales staff. Sales staff isn't involved in the factory environment, so we would call that a period cost. If it's a depreciation on factory equipment, oh, well, now it's a factory cost, and we would then say that's a product cost, but it would be manufacturing overhead. Wages for factory machine operators. Once again, we see the word factory. We think, well, these people are directly related to the production, so we would say it's a product cost. And then we would say, well, these are direct labor. We're probably being able to trace the work by these machine operators on each individual product. So what usefulness is this? Well, a lot of times you're going to be given a list of items, and you've got to say, in this case, summarize which items are manufacturing overhead. So when we look at something like this, we can go through and say, oil for manufacturing equipment. Is this factory or not factory? Well, that seems like factory. Wood for frames. Well, that seems like factory. Company, president's salary. Well, that's not dealing directly with the factory, so I don't know what that's doing. Interest expense. Well, that's not dealing with the factory. Plant supervisor. Well, instead of factory, it says plant, which is another word for factory. So we would consider that. Depreciation expense on company cars used by the sales force. Well, here, you can see the word sales, right? So we're going to say no. Plant janitor salary. So once again, this is plant. So it has something to do with the factory. Plant depreciation expense. Yes. Glue for picture frames. Yes. Now we have an idea of which ones are period costs versus which one are product costs. Let's actually go through and look through and identify what are they? Are they direct materials, direct labor, or manufacturing overhead? Oil for manufacturing equipment. Well, we're not probably going to be able to apply that specifically to any product. That's kind of a general overall. So we would say that's manufacturing overhead. Wood for frames, well, that's the primary product, so that's probably direct materials. Plant supervisor salary. Can't trace it directly to any product. Manufacturing overhead. Plant janitor salary. Again, manufacturing overhead. Boy, I need to turn this. Plant depreciation expense. I'm going to say that's also manufacturing overhead. Glue for picture frames. Well, here's an example similar to the nails. We are not going to trace glue. We're not going to measure out, well, maybe some manufacturing processes do have it down to that level, but in general, we would say, no, we're going to have a certain amount of glue, and we're going to just say it's approximately, 1 ounce per frame or whatever it is. So manufacturing overhead. So we would take these three and we would add them up. We would say 25 plus, well, we're not going to add the 48,000 because that's not manufacturing overhead, plus 5,500 plus 1,900 plus 8,100 plus 200. And what would our total be? Well, that's 2, 5, 10, 7, 8, 9, 10, 1575. Does that look right? And it could be anything. It doesn't necessarily have to be MOH. The question could be, well, what's the direct material? Or what is the direct labor? Or what are the period costs? So this is an example of being given a list, and you've got to go through first, sort it by period and product, and then if it's a product cost, make sure you understand if it's MOH, if it's manufacturing overhead, direct material, or direct labor. Okay. Our last one here is just another definition. So we already looked at direct and indirect cost, product and period cost. And this is setting us up for the next several chapters to where we're going to be using these various terms to help us make decisions. Fixed and variable cost. So you can find some of the definitions of these, and I'll go over them a little bit. Marginal cost is the cost of one additional item. The two that I want to focus on are going to be variable cost and fixed cost. So when we start looking at things, variable cost is any cost that changes with production. So in other words, if I make 10 bikes, well, I'm going to buy 20 wheels. If I make 100 bikes, I'm going to buy 200 wheels. So that would be a variable cost. The amount that I spend on wheels changes with how much I produce. A fixed cost is it does not change. Does not change with production. So let's say I have this bike manufacturing shop. I've got a small shop, and I have a rent on a space, right? So that deals with the product. We're renting the space where we're assembling these things. But is that a variable cost? Does the rent change whether I make 10 bikes or 100 bikes? It does not change. So this particular cost is what we call a fixed because it does not change with the level of production. Differential cost and controllable cost, sunk cost, the text has a little bit of a definition. So I think you can read those and understand those. But let's take a look at these. Monthly depreciation of equipment used in customer service. Well, so these are kind of examples of fixed and variable costs. Cost of rubber used to manufacture LL Bean boots. Well, the more boots you make, the more rubber you're going to use. Cost of oranges sold at Kroger's grocery store. Well, here's a merchandising environment. Well, the more sales. Monthly office, the more sales, the more oranges the more oranges you sell, the more oranges you have to buy. So that's a variable. The monthly office lease cost. Why so specific for the Portland office of Ernst & Young? So I used to live and work in Portland. I don't know why the text has this. Okay, but this is exactly what we're talking about, a rent. That's a fixed cost, right? Because it doesn't matter how much business they do, they have this lease. And similarly here with this one, the monthly depreciation of equipment. Well, it doesn't matter the volume of business being done, that's going to remain the same. So that's fixed. Okay, so that is the last part of this kind of terminology part of the chapter. You please pay attention to see which questions you can now do. So 1 through 5 were covered in the first video, chapter 1, and most of the other ones are here. So you can work on these using this in the textbook. And I will post the next one, which is how to conduct, looking at cost of goods manufactured and income statements and that sort of thing. And we'll cover learning objective 2.5. That'll be the only thing we cover because it's a little bit more calculation heavy. Okay, thank you. And if you have any questions, please see me during the office hours or email me, and I'd be happy to answer. Have a good day.